Hi, this is Larry Goins, and welcome to this special training on how to earn double-digit passive returns without tenants. Now, you've probably heard of me in the past, but in case you haven't, I wanted to let you know why you would want to listen to Larry Goins. Now, just real quick, this is not the biography channel, but just to let you know, I have bought and sold hundreds of houses. I've invested in commercial, multifamily, and done land development. Been a licensed real estate broker since 1984. Been a licensed general contractor since 1985. I also used to sell stocks, bonds, and mutual funds, and I was licensed in 1986 to do that. I've been in the mortgage business since 1996. I was the president of Metrolina Real Estate Investors Association, the largest nonprofit investors group in the Carolinas, in 2003 and 2004. We've owned and managed 5 successful businesses. I'm a published author of 3 different books that are available wherever books are sold, and I've personally mentored hundreds of successful students. I've done residential, commercial, multifamily, triple net lease, which are properties like Dollar Generals, Family Dollars, Shoney's restaurants. I've owned mobile home parks. I've done land development and subdivision, where I've gone in and bought the land, had it subdivided. I've cleared, graded, graveled, and paved the roads, and then I've sold lots and built houses on those lots as well. These are a sample of a few of the properties that I have owned as far as commercial goes. Now, I've done wholesaling, retailing, lease options, short sales, subject tos, rentals, and seller financing. I've used cash, hard money, traditional financing, private money, partnerships, private placements, and even equity participation. I've personally shared the stage with Susie Orman, Michael Gerber, author of The E-Myth, Tony Robbins, Robert Kiyosaki, author of the Rich Dad, Poor Dad series, and even Donald Trump. Now, my first book was called Getting Started in Real Estate Day Trading, and it's available wherever books are sold. And Michael Gerber, author of The E-Myth, actually wrote the foreword to the book. And in the foreword, he said, "It is this kind of genius that entrepreneurs such as Larry Goins, Ray Kroc of McDonald's, Michael Dell of Dell Computer, Bill Gates of Microsoft, and so many more create for the rest of us." My latest book is called HUD Homes Half Off, and we have literally mastered the HUD buying process to be able to buy nice homes in decent areas with minimal repairs. We have a radio show. Candace and I host Brag Radio, and it's a syndicated radio show that talks about investing in real estate to be rich and generous. That's what Brag stands for, using real estate to be rich and generous. We have a lot of different missions and different organizations that we support. Just one of them is Holy Way Missions International Church in the Philippines. And these are pictures of some of the children picking up their school supplies for the year that we help provide for them. This is a picture in our office of building our communities. These are copies of canceled checks that we have given to different organizations to help them in their charities. And these aren't just $100, $200, $300. You'll find checks here for $1,000, $3,000, $5,000, $10,000, even $20,000. Back to real estate. There are 2 types of real estate. Real estate as a business and real estate as an investment. Business is active. You're buying and selling and buying and selling and buying and selling. And investment is passive. The sad truth about most new active investors that get into the business, most people who want to be an active investor, they never make any money in real estate. That's just the sad truth. The problem is they use passive investors to fund their business. Well, eventually, neither one makes any money, and both end up frustrated with real estate. So what is the answer? What if you could have great passive real estate investments handed to you on a silver platter from someone that has done hundreds of deals over the last 30 years? Neighborhood Housing Group is our organization. We help people become homeowners while also helping passive investors earn double-digit returns of 12%. I call the home buyers homeowners in training, or HIT. What we do, we hand select properties and sell them on a land contract to first-time home buyers. We then sell those properties to passive investors who get a 12% return on their money. Now, let's talk about the different seller financing methods. There's basically three different types. There's a mortgage, a deed of trust, and a land contract. Now, some states use a mortgage, like South Carolina is a mortgage state. Okay, it's just the type of paperwork that's used when you get a loan on a property. North Carolina is a deed of trust state. It's just the type of paperwork that's used in that particular kind of state. And there's also a land contract, which you can use in all states. Now, they are all called notes. With a land contract, the seller keeps the deed to the house until it's paid in full. That's very important, which means the investor, the passive investor, is really buying a property with a land contract buyer already in place. Here are some reasons to use land contracts. They're easier to close the transaction. You can close the transaction faster. The investor keeps the deed. You can typically avoid foreclosure. It's easier to get the property back if they default. And the investor is in control. See, with the land contract, they really are a homeowner in training. So let's talk about the difference between the stock market or homeowner in training passive investing. The financial markets are volatile to the economy, current events, and more. You are not in control of your own investments in the stock market. How about rentals or homeowners in training? Now, personally, the only two things I hate about real estate are rehabs and tenants. Every time a tenant moves out, if you are a landlord, you have to rehab the house for the next tenant. At least you typically have to put in paint and carpet. Let's look at the difference between a rental or a homeowner in training. On the left side, if you have a rental income of $600 a month, that's $7,200 a year. Out of that, you're going to pay property management. You're going to have a vacancy rate of about 5% as well. You as the landlord are going to have to pay taxes. You're going to have to pay insurance, and you're going to have some repairs. Total expenses is almost 1/3 of your income. Now with a homeowner in training, okay, on the right-hand side, same $600 a month income, same $7,200 a year, but the only fee that you will pay is a loan servicing fee of approximately $25 a month. So if you bring it down, that's only 4%. So your net cash flow is 96% of the total income. Is that great or what? And there's no tenants, no trash, no termites, no toilets. And the best part, no rehab. Now let's talk about how to pick a market. You want to pick a market that has major industries, that has population that is growing. Okay? Doesn't have to be huge growth like Las Vegas, but you want a population that is growing. You want low property taxes. You want affordable housing, not where all the prices of all the houses are 6 digits. You want high rent to price ratio, meaning you can get high rents based on a lower price of a property, because that's how we're going to figure our analysis to be able to sell these properties. You want a good amount of inventory, but not too much inventory. You don't want a market that's flooded with properties. That would be a depressed area. You want a stable economic climate. You want an area with moderate appreciation, but not a hot market, okay? You don't want a hot market, and you don't want a depressed market. You want fairly low unemployment, and you want a market that has a good number of investors, so there are some rental properties as well, okay? That gives you your pool of buyers to pull from, and you want pretty low vacancies. Guess what? Here's why we like the Carolinas. The Carolinas has everything mentioned. Plus, it's a banking capital. We have stock car racing. It's a stock car racing capital, and that's where the NASCAR Hall of Fame is in Charlotte, North Carolina. And we have the Carolina Panthers. Now, some of you may not think that's a positive, but that's okay. Let's talk about how we select our properties. We look for nice homes in decent areas where people want to live and raise a family. See, we make hundreds of offers a week on hand-picked properties to find really good investments that meet our strict buying criteria. Let's look at some analysis. Here's what we do. We find out what the rent ranges are. Let's say the rent range is $600 to $800 a month on a particular house we're looking at. We'll take that low number of $600, okay? This allows for adding the taxes and insurance back into it for the buyer who's paying that on a monthly basis. Then what we do is we take that $600, we calculate a loan amount based on 20 years at 9% interest, okay? Then what we're going to do, that gives us a loan amount of $66,686. Then, after doing our research, we're going to find out what an average home buyer in that area might be able to put down as a down payment. And if it's $5,000 in this case, we're going to add that to our loan amount. So $66,686 plus $5,000 is a sale price of $71,686. But that's kind of an odd sales price. What we're going to do is we're going to make the sale price $69,900 minus the $5,000 down. That would be an amount financed of $64,900. And that's 240 months or 20 years at 9% interest rate. That would give us a payment of $583.92 per month for our homeowner in training, which is just under the $600 of the low end of the rent range. So now, my buyer, my homeowner in training, is going to be paying the taxes and insurance, and it's going to be escrowed every month. So the money is there at the end of the year to pay the taxes and insurance. So, in a typical example, if we were to add back the taxes and the insurance, their total monthly payment would be $683.92. And that's what the homeowner in training is going to be paying every single month. And the best part is, it's still less than the top of the rent range. As a passive investor, we would sell that loan, that $64,900 loan, for a 12% yield, which would be an investment to the passive investor of $53,031.47. And that is going to be only 75% of the sale price that we sold it to the homeowner in training, which means the investor has 25% equity built right into their investment. In other words, the property could drop 25% in value and the investor would still be whole. Now, I'm telling you this so you know that even though I've never seen a house drop 25% in value in this price range of a house, it could happen and you're still made whole. Imagine that in the financial markets. What kind of stock or bond or mutual fund can drop 25% and you still haven't lost any money? We love double wide mobile homes with land. They are newer, they're larger, and they're in better shape than an old single family house that needs lots of work. Quite frankly, we have found that buyers prefer them as well. And they also seem to be a better qualified buyer that wants to live in a double wide mobile home on its own land. Our typical deal would be somewhere around 1,600 to 2,200 square feet, a decent sized house. It's going to be 3 or 4 bedrooms. It's going to be 2 or 3 baths, and it'll be around an acre of land, plus or minus. They have garden tubs. They have plant shelves. They'll have a deck typically. They'll have an island in the kitchen, vaulted ceiling, and most are built in 2000 or newer typically. Now, I have bought some in the late 90s, but I typically do not go older than the late 90s. And we also stay out of the major MSAs. And when we buy them, they're typically move-in ready, or we do a little bit to make them move-in ready. They're in smaller towns where people were born, raised, have ties to the community, and they want to live and raise a family. And the best part is they have family close by, so they have that support system built in. Let's look at double wides versus old single family residents. There are no old 1930s 800 square foot houses, 3 bedroom, 1 bath, 2 bedroom, 1 bath, houses in bad areas, no old wiring or plumbing to have to be updated. There's typically no theft problems. There's no lead-based paint or asbestos issues to have to deal with. And personally, I've never seen a double wide in a war zone. Here's the difference. Which house would you rather own? Some advantages. There are better quality buyers. They are better quality homes. They're a more stable investment. The buyers have family close by as a support system, like I mentioned earlier, and they're nicer houses in nicer areas. There's low crime rate in the smaller towns, and there's a lower default rate. So let's look at our strict due diligence. When we find a property at the right price that's the right property, we visit the property. We pull online sold comps. We want to know what houses similar to ours are selling for. We're going to run neighborhood analysis. We're going to run rent comps. We're going to talk to realtors. And we're going to get it ready to sell. And we're going to also talk to property managers. So, who are our buyers? First-time home buyers are our typical buyer. They can't get a bank loan, and they've given up on the American dream. Now, it doesn't necessarily mean they are bad people. Remember, bad things happen to good people. And realtors have many of these buyers with down payment ready to buy. See, we're basically serving a market and a need that hardly no one else is helping. Now, when we find a buyer, we collect the following information. We get the verification of employment, verification of rent, authorization to release information so we can gather all that. We get 1 month's worth of pay stubs, 2 years W-2s from an employer, 2 years of tax returns, and we also get a copy of their driver's license and a copy of their social security card. We have an RMLO, a residential mortgage loan officer, also known as a mortgage broker. They take the credit application. See, they do all the work and underwrite our buyer for us. They keep us in compliance with rules and regulations. Now, they pull their credit, they run their debt ratio to make sure that the borrower has the ability to make the payment, they verify the down payment, and they check for compensating factors. Sometimes people have maybe a little less than perfect credit, but they have more money to put down. That's a compensating factor. Let's talk about closing the transaction with the buyer. We always have an attorney or a closing agent close the transaction, so it's a real closing. We also have a licensed servicer to service the loan. We want to make sure that we have a servicer that is licensed in the state where the property is, service the loan. They collect the monthly payments. They collect any late fees, if any. They escrow for taxes and insurance. And the best part is they pay the insurance when it comes due, and they pay the taxes when it comes due. They have real-time online reporting. They handle all yearly tax accounting, and they even send out the 1098s to the borrower at the end of the year. And they send us, or you as a passive investor, a monthly check. Let's look at some real deals. Here is a property that we sold to a homeowner in training for $59,900. They put $5,000 down. We financed $54,900. For 20 years at 9%, their payment is $493.95. Now that does not include their taxes and insurance. We sold this loan to an investor for $44,860.21. That's a 12% yield to the investor, which they're in it at 75% of value, which means they have 25% equity. They're collecting $493.95 a month, and they will collect $118,548 over the next 20 years. Here's another deal right here. This is a house that we sold to a homeowner in training for $75,000. They put $5,000 down. We financed $70,000. 20 years, 9% interest. Their payment is $629.81 a month. That's a total payback of $151,154.40. We sold this loan to an investor for $57,198.81. That's a 12% yield to the investor, which means they have 75% investment to value invested, which means they have 25% equity in the property. They're collecting $629.81 a month and will be paid back $151,154.40 over the total life of the loan. Here's another one. This is one that we sold for $69,900 to a homeowner in training. They also put $5,000 down. So we financed $64,900. 20 years, 9%. Their payment is $583.92 a month for a total payback of $140,140.80. The investor's price would be $53,031.47, which is a 12% yield to the investor. Like the rest of them, the investor still has 25% equity in the property. They're receiving $583.92 a month for a total payback of over $140,000. From the looks of the pictures and the size of the house, you can see why I love double-wide mobile homes. Now, what if they default? What if they stop paying? Well, with a land contract, it is typically easier and faster to get the property back. You don't always have to go through foreclosure to get the property back. In fact, most of the time, you don't have to go through foreclosure. Then, once you get the property back, you get another down payment, which reduces your cost and increases your yield. In other words, you sell the property to another homeowner in training, you get another down payment, which reduces your all-in cost, and that also increases your yield. Now, if you don't want to have to deal with it once you get the property back, I will resell it for you if you want me to, but I am going to keep the down payment just for marketing it, showing it, getting the buyer approved, and all the other administrative processes that we go through. The bottom line is, you actually make more money if you have to resell the property again. Let's hear from a happy homeowner.
If you are looking to buy a home and do not want to go through the whole hassle of bank qualifications or going through a bank to get a home loan, neighborhood housing is the real deal. You are looking at somebody who does know, because I am going through neighborhood housing right now to buy our first home. And we have purchased it through neighborhood housing, so now we are homeowners, our first home, and we absolutely love it. And there was no bank qualifications, there was no hassle. There was, someone with you there every step of the way. So, again, if you are looking to buy a home and you don't want to go through banks, neighborhood housing is the way to go. Thank you.
Let's hear from a happy investor. Hi, Larry. I wanted to tell you how happy I am with the property I purchased from you. In fact, my accountant couldn't believe the deal I got. I am getting $650 a month. I can't wait to do my next deal with you. Who purchases land contracts or properties with homeowners in training in them? Busy professionals, retired individuals, stock market investors that are tired of the volatility, tired landlords that are tired of dealing with tenants, and basically anyone who wants to earn a monthly income. Now, how do they fund the purchase? You can use savings accounts, brokerage accounts, or retirement accounts. You can also borrow at a lower rate or use a home equity line of credit. We have many people that use their home equity line of credit and borrow at a low rate and invest in these properties with the homeowner in training, and they make the spread on the interest rate. How much money do I need? You should have at least $50,000 to start, although we do have some that are in the $30,000 to $40,000 range occasionally. The different types of self-directed retirement accounts you can use. You can use a 401k, a solo 401k, a simple, which is savings incentive match plan for employees. You can use a Roth IRA or traditional IRA, even your education savings account or health savings account. And we can help you with finding a custodian that allows you to buy real estate in your retirement account. And we have several that we personally work with. So, what's the next step? For more information, call Alyssa at the Note Desk, 844-NOTE-DESK, which is 844-668-3337, or simply fill out the form below and Alyssa will get back in touch with you soon. Here's the process. Alyssa will explain the process to you. Then you get on our VIP buyers list. Then you select an investment. We close the transaction for you, and then you start receiving your monthly passive income. Give Alyssa a call or fill out the form below, and we look forward to working with you and helping you create some double-digit passive returns. Thanks a lot for watching. I hope you got a lot out of this, and I look forward to working with you.